Think about the best general managers in professional sports. The best ones are never the best players, and they don't need to be. What they're exceptional at is something different: identifying talent, building a team around a clear strategy, putting each person in the role where they contribute the most, and then holding the whole organization accountable to results. The GM is deeply involved. They study the game, they understand each position well enough to evaluate performance, spot weakness, and make good decisions about who to bring in and when to move on. Their job is to build and coordinate the team, and to make sure the overall strategy stays coherent across every part of the organization. And that's a useful frame for thinking about how you operate your virtual investing organization. You are the GM of your own investing firm. But there's something important to add to that picture. As the GM of your virtual investing organization, you also wear a second hat, the trader and investor hat. When you step into the income engine, you are the one executing the trades, in your own account, with your own capital, following the method your mentor has taught you. When you step into the growth engine, you're the one placing the options positions, if that's the strategy you're following. You're the one handling assignments. You're the one managing the portfolio. When you step into the accumulation engine, you're the one making the investment decisions and managing the thesis positions over time. The mentors do not do any of that for you. They teach you how to do it well, but the execution is always yours. So you're wearing two hats simultaneously: the GM hat, setting strategy, identifying gaps, evaluating mentors, reviewing the system, and also the trader and investor hat, actually executing each engine in your own accounts, developing genuine skill through real practice in close partnership with the people you have brought into your virtual investing organization to guide you. The solo investor only has one hat, and it has to cover everything. They're the strategist, the trader, the analyst, the risk manager, the reviewer, all at once, all without support. When something goes wrong, there's no structure for figuring out why. It's just noise and uncertainty and the slow, expensive process of figuring it out alone. Most active investors spend most of their time in execution mode and almost no time in strategic mode. They place trades, manage positions, make decisions, and then do it again next month, whether or not last month taught them anything useful. But the GM hat is what creates the strategic perspective that turns experience into improvement. It's the difference between doing the same thing for 5 years and genuinely developing over 5 years. The two-hat approach is different. When you are inside an engine, focused on execution, you have the guidance of your mentors, shaping how you work. When you step back and you put on the GM hat, you have a structured framework for assessing the whole system, identifying what needs attention, and making the decisions that keep the virtual investing organization developing in the right direction. The two roles are complementary. Each one makes the other one more effective. It's also worth saying what the two-hat model is not. It's not a case where you wear the GM hat until you find good mentors and then hand the execution over to them. That's not what you do. The execution stays yours always. What the mentors bring is expertise that makes your execution better. A tested framework, a feedback loop, compressed learning from their own experience. They inform how you work, but you do the work. Now let's look at what each hat actually involves, starting with the GM hat, because this is the one that is most different from how people typically think about personal investing. There are 4 things the GM hat is responsible for, and each one is genuinely yours. None of them can be delegated to a mentor. The first thing is setting the overall strategy. Now, the 3-engine wealth system is your strategy. You have decided to build a system with an income engine, a growth engine, and an accumulation engine. You've decided how much capital goes where, when the threshold triggers activate, and how the engines relate to each other. These are strategic decisions. Your mentors advise within their domain, but the architecture of the system is yours. This matters because it's easy to let a mentor's preferences gradually become your strategy. You start following their approach closely, which you should do, which is correct. But then you find yourself sizing positions the way they do, or holding a thesis longer than you should because the mentor has not changed their view. The mentor informs and teaches within your strategy, but keeping the strategy clearly yours is the GM's job. The second thing is identifying gaps. Where's the system most exposed right now? Where would better guidance make the biggest difference to your results? Is your income engine running without a coherent method? Or is your growth engine stock selection process unclear? Or is your accumulation engine thesis process underdeveloped? You look across all three engines regularly and ask where the weakest link is. That assessment drives your decisions about which mentor to prioritize finding and what to focus your learning on. We'll build a structured process for this in the next episode. The third thing is evaluating the mentors that you learn from. Not every mentor is going to be right for you. Some teach excellent methods that require more time than you have. Some are effective at one level of skill and become less useful as you develop. Some have great content, but a style that simply doesn't fit how you learn. Deciding who to engage with, how long to trial them, when they've served their purpose, and when to find someone better suited to where you are now, those are GM decisions. You approach a mentor the way a hiring manager approaches a candidate. You have standards, and then the mentor either meets them or they don't. The fourth thing is tracking the overall system performance. At month end, you fill in the scorecard. You review each engine against its targets. You assess not just whether the numbers were hit, but whether the process was followed. You look across all three engines and ask what is working, what is not working, and what needs attention in the coming month. Your mentors can help you interpret results within their specific domain, but the cross-engine review, that big picture assessment of how the whole system's working, performing, that's yours and yours alone. Now think about the trader and investor hat in the same light. When you are inside each engine, executing a trade, managing a position, evaluating a thesis, the mentor's framework is guiding your thinking. But the decision, the action, the accountability, they're all yours. You are not following orders. You're applying learned expertise in your own accounts, developing genuine skill through real practice. The mentor makes you better at doing it, but you are the one doing it. And this matters for how you think about the relationship with your mentors. You're not a student who needs the teacher's approval before acting. You are an investor who has engaged a specialist to accelerate your development. When the mentor says something that does not fit your situation or conflicts with the three-engine framework you're running, your judgment takes precedence. The mentors are a resource, not an authority. You own the decisions. Now, let's map out what the virtual investing organization actually looks like when it's fully assembled. The org chart has two layers reflecting the two hats. The first layer is you as the trader and investor, inside each engine, working alongside your mentors. The second layer, sitting across the top of all three engines, is you as the GM, coordinating the whole system, filling gaps, evaluating mentors, and reviewing performance. Both layers are you, both are active simultaneously. In the income engine, you are the active trader, executing a method in your chosen instrument, whether futures, options, equities, forex, or something else. Alongside you is a mentor who specializes in that instrument and approach, whose framework guides how you work. Now, as your skill develops, you may add a second perspective, someone who addresses a specific aspect of the method your primary mentor doesn't cover. The key requirement for the income engine mentor is that the method they teach is something you can actually execute with your available time at your starting account size in the instrument you have chosen. And that last point, whether the method fits your actual life, that's really worth emphasizing. A lot of investors follow mentors who trade instruments they can't access at hours that doesn't suit their schedule and with account sizes that are beyond where they are starting from. The method might be excellent in the abstract, but if it doesn't fit your situation, it's the wrong mentor for you right now. The fit between method and life is a GM level assessment. You make that call. In the growth engine, you are the systematic investor, running positions in your chosen approach. The wheel strategy, the value investing, dividend investing, or any other method that suits your situation. Alongside you is a mentor who teaches not just the mechanics of the approach, but how to select the right companies or assets to apply it to. And by the way, selection is where most growth engine investors make or lose their edge. So your mentor needs to be strong on this, not just on execution mechanics. In the accumulation engine, you are the thesis investor, constructing and managing a portfolio of long horizon asymmetric positions. The mentor layer here is often less a single teacher and more a curated set of research sources. Macro analysts, sector specialists, cryptocurrency researchers, or whoever covers the areas where you are building theses. You are not following trade recommendations alone. You are absorbing high-quality analytical thinking and using it to inform your investment decisions. Running alongside all three engine partnerships are the support functions. So you've got tax and corporate structure. That might be the most important one that most people neglect. If your income engine generates meaningful trading income, the tax treatment of that income matters enormously and varies significantly depending on your jurisdiction and your corporate structure and how your trading activity is classified. So you want a professional who works specifically with active traders and investors in your jurisdiction, not just general accounting advice. The right structure can make a meaningful difference to your after-tax income. So sort this out before your income becomes large enough to make these mistakes costly. A peer community is the other support function that's worth building. People at a similar stage, running a similar system, dealing with similar challenges, is what we're talking about here. A peer community provides accountability, shared learning, and a reality check that's different from what a mentor provides. Mentors teach from expertise. Peers learn alongside you. And specificity matters here. A community focused on the same approach or instrument tends to generate a lot more useful shared learning than a general investing group where everyone is doing something different. And there's also practical benefit to being part of a community of active practitioners that goes beyond just learning. Markets change. Conditions that made a particular approach highly productive 6 months ago may look different today. A community of people operating in current market conditions is often the fastest source of real-time insight about what is and is not working. And it's faster than a mentor whose content is produced on a weekly or monthly cycle. So peer community and mentorship serve different functions, and you can benefit from both. And so that's the full picture. You in each engine as the executor alongside your mentors. The GM coordinating layer sitting across the top, also you. And support functions covering the areas that cut across all three engines. Now, running your investing through this structure creates leverage. And I'm not talking about financial leverage. We're talking about the ability to multiply your effective capability by learning from people who have expertise that you're still developing. That kind of leverage actually reduces your risk. Now, the first form is expertise leverage. Your virtual investing organization gives you access to the combined knowledge and tested experience of multiple practitioners, each of whom has spent years developing skill in their domain. The sum of that input is far greater than what you could develop on your own in the same time frame, and at a fraction of the cost of learning through direct market experience alone. The second is flexibility. You can change who you learn from at any time. There are no contracts. There's no termination processes. There's no commitments. If a mentor's content declines, or if you outgrow their level, or if a better fit emerges, you simply redirect your attention. For a company hiring full-time staff, changes like that are slow and expensive. But for you, they're basically frictionless. The third is compounding competence. As you learn from each mentor, your judgment develops. You start to understand not just what to do, but why. And that understanding lets you evaluate new information more critically and spot poor reasoning and make increasingly good decisions independently. Over time, your reliance on any specific mentor decreases because you've internalized what they taught. The virtual investing organization accelerates your development. It's a structured path to capability, not a permanent dependency. And there's one more benefit worth naming. The two-hat structure changes how you experience difficult periods. Every active investor goes through stretches where things are not working. A solo investor tends to question everything at once. The strategy, the method, their own judgment. Without a framework, a difficult period becomes a crisis of confidence. But when you're running a virtual investing organization, a difficult period becomes a diagnostic problem instead. Something specific is not performing. You can identify which engine it is. You can consult the relevant mentor's framework. You can assess whether it's a market condition or a process gap. You look at your scorecard and work out what the system is telling you. The structure does not make difficult periods disappear, of course, but it gives you a principled way to work through them. And over a 5-year system like the $1 million experiment, that turns out to be one of the most valuable things the whole framework provides. The two hats also help here in a specific way. When you're deep in a difficult path in the income engine, say losses accumulating, method feeling shaky, it's hard to assess the situation objectively while you're inside it. Putting on the GM hat and stepping back to look at the whole system can restore some perspective. Is this a process problem or a market condition? Is the growth engine holding up? Is the trajectory overall still intact? The GM view gives you a reference point that the narrow view from inside a single struggling engine can't provide. So let's bring this together. Running your investing through a virtual investing organization means wearing two hats at the same time. The GM hat, setting strategy, identifying gaps, evaluating the people you learn from, tracking overall system performance. And then there's the trader and investor hat, executing each engine yourself in your own accounts, developing real skill through real practice, guided by the mentors that you've brought alongside you in each engine. Neither hat is optional. If you only wear the execution hat, you're simply a more active version of the solo investor, making trades without strategic oversight, without a process for identifying gaps, and without a framework for measuring whether the system is working. And if you only wear the GM hat, nothing gets executed. You need both. And the good news is that over time, wearing both becomes natural. The switching between them becomes part of the rhythm of running the system. The solo investor tries to cover all of this with no support structure and no strategic framework. The virtual investing organization investor covers it with mentors who make the execution better and a GM perspective that keeps the whole system developing in the right direction. The org chart we built today is where this becomes concrete. You in each engine alongside your mentors doing the work, and you as the GM across the top, coordinating and managing the overall system. Support functions covering tax, structure, and peer community. I suggest that you build it engine by engine. Start with the income engine where the need is most immediate, and then add capacity as the system grows and your needs evolve. The next episode is the expertise audit, the practical first step in building the org chart. Before you can find the right mentors, you need to know where your gaps are. So we'll walk through a structured process for mapping your current expertise against what each engine actually requires. It's a short exercise, and it focuses everything that follows. One thing worth doing before that episode, think about where you feel the most uncertain right now, and not just in terms of knowledge, but in terms of execution confidence. Where in the system would better guidance make the biggest practical difference? You don't need a precise answer yet, but sitting with that question before the next episode makes the audit process much more useful. Also, if you have not downloaded the plan and blueprint from the $1 Million Experiment from theinvestingproject.com, now would be a good time. It gives you the full $1 Million Experiment financial model, the projected 5-year trajectory of all 3 engines. Having that picture in mind as we build the virtual investing organization in this module helps to clarify why getting the right mentors in place early matters so much to the long-term outcome. Remember to like and subscribe so you don't miss the next episode, and we'll see you there.